see people come join our firm and they're like, my CPA allowed me to do this last year, but then I listened to your podcast and I realized it was wrong. So I just want to work with you guys who can tell me the truth. And I think a lot of this happens because audit rates are so low, and the CPA, it just, when audit rates are low, you can be a little lazier with your tax strategy and your compliance. But the problem is that when it gets uncovered, there's nothing stopping the IRS from pulling somebody's return from a firm, realizing that they received poor advice, and then saying, okay, well, we've got this CPA's PTIN number. Let's just go pull all the other returns that are similar to that this CPA prepared. So as a consumer, as a buyer of tax preparation services, you have to guard against the FOMO that you will experience when you get into these various groups online and you see somebody saying, oh, I'm going to qualify as a real estate professional, or I'm going to qualify for the short-term rental loophole. And you're kind of sitting there like, that doesn't make any sense. How can you possibly be doing that? You have to guard against jumping on with that same accountant, because sometimes people won't tell you what you need to hear to win audits and to substantiate yourself. They will tell you what you want to hear to win your business and take your money. And so you have to be the one that educates yourself on this stuff, at least at a high level. You don't need to know all the code sections. You don't need to know the tax court authority, but knowing what questions to ask and just knowing, when things are potentially red flags will really help you avoid getting in a bad situation at some later point. Because when those audits come, they come fast and it's a flood.
Yeah. And it's not worth it. When people go through those, they're like, this was definitely not worth it. I mean, and there's typically going to be a cost if you were pushing the limit. And even if there wasn't, it's probably not worth it, because it's I actually had an audit early in my professional career, very, very early, like several years out of college even. And I was self-employed, and I learned very quickly how the experience worked. And I would consider it a good experience, kind of like a failing forward experience. I really learned how they work and had an appreciation for record keeping and all that sort of thing. And they were for real. I mean, they're like, we need you to, I remember they were looking at, I think it was mileage, because in that job I was writing off mileage, and they're like, okay, we see your mileage log. We need to see your calendar. And so I'm like, oh, that's creative. So they kept digging to try to verify it. I'm like, they're smart people like all of us, and they're going to find it if you've pushed the envelope.
I'm glad you said that, because I think that a lot of us have an ego that thinks that we're smarter than the IRS agent, but the IRS hires very capable and very smart people. And the people that are auditing Section 469 are very smart people. So pushing the boundaries here is not a wise decision. I mean, I've seen it all. I've seen the whole, it took me 8 hours to set up my VRBO listing. And it's like, dude, nobody's going to buy that. Like VRBO takes 30 minutes to set up and another 30 minutes to load your photos. So either you're computer illiterate or like something is wrong, right? Either way, you need help. But if you're going to qualify for real estate professional status, or if you're going to run with that short-term rental exception, you have to be very careful and you have to be very diligent about documenting your time. Another thing that we get every once in a while, I'll get a question and somebody will say, like out in one of our communities, will be like, well, I bought a short-term rental, but I'm going to use it 21 days, right? Which trips up the personal use rules. It means that you can't, if you cost seg and bonus depreciate the property and it creates a big tax loss, you can't actually use the tax loss because you trip the personal use rules. The tax loss gets suspended. You can't use deductions in excess of income once you trip those personal use rules. So they'll say things like, oh, I'm going to go and stay there for a while, but don't worry, like I'm going to do it in a way where, somebody, if I get audited, they won't be able to find it. Or they'll ask me, if I do get audited, how would they find it? But it's really simple. It's like, okay, let's look at your calendar. When did you block your calendar? Because what are you going to do? You're going to block your calendar. You're not going to decide I'm going to go take a 3-week trip and potentially have somebody be able to schedule during my 3-week trip. So I'm going to go block my calendar. And then they're going to go and look at your bank statements.
Transactions.
Yeah, exactly. It's just
like, oh, Naples, Florida.
Right. It's like, come on, guys. Credit card statements, everything. So you gotta be careful with this stuff. You will leave a paper trail. And that's the important thing to understand, is that they can dig those paper trails up.
One of my favorite quotes I say on the podcast all the time, it's I'll tell you what's most important. Show me your calendar and your checkbook. That reminded me of that. It's like the IRS can ask for your calendar and checkbook when you're getting audited, and that will show them very quickly like what's actually going on. Like you can tell a lot about a person by looking at their calendar and their checkbook, and you kind of have to be reasonable about these things and not so err on the side of like, following the rules at a start. And like your firm is helping someone to follow the rules as opposed to an accountant. I always just advocate for clients hiring accountants that are going to help them stay compliant, as opposed to a lot of times clients want to hire accountants that will help them find all the loopholes.
Yeah.
And
Yeah.
it's like, no. Me and you can go find the loopholes, and then they can say like, that's a bad idea.
Yeah. Yeah.
Like they need to help you stay between the lines.
I get the question every once in a while. Oh, I'm looking for an aggressive accountant that's going to push the boundaries. Are you aggressive? Are you a risk taker? And I always kind of chuckle when I get this question, because the people that are pushing the boundaries, that are risk takers, are they're typically pushing the boundaries due to their own ignorance. A lot of times they're not intending to do what they're doing, but they just don't know any better. They don't understand how these rules work. It'd be like, me going into the restaurant niche and offering tax services to restaurant owners and having all sorts of strategies around inventory, even though I've never done anything related to the restaurant niche. It's like, yeah, okay, like, is that aggressive or is that just not knowing? And so, I like having those conversations, because I think that what consumers perceive to be as aggressive is, from a professional perspective, a lot of times, not every time. There are definitely places where you can push the boundaries, but a lot of the times it's just ignorance. It's just simply reporting things incorrectly, setting the consumer up for unneeded risk, right? Especially when it comes to real estate professional status and material participation. I can't tell you how many times I see the whole, oh yeah, my accountant let me count all my research time and all my networking time. And I'll be like, dude, I just had 2 audits last quarter that people called me in on that they lost, because that's what their time log showed, is research time and networking time. It's like, that does not count.
Yeah,
It
trust
doesn't
me.
help. Yeah, it doesn't help your property collect more rent or pay more bills. Like, it just doesn't work like that. So, but if you don't know these rules, then, you can get caught taking positions that you didn't intend to take.
Yeah. And that's really, I think expertise is a key factor. Like if you're paying for help, expertise is a huge deal. That's why we advocate specialists, like the fact that you focus on in your firm working with real estate. That's a huge deal because it shows that you spend lots of time in that area. Just like our planning firm, like we zero in on working with earlier career physicians. I mean, like when you zero in on one area, you're going to develop better expertise and be able to provide much more value. And real estate is the one thing about real estate. I mean, I know people call it passive income and I know why people call it passive income, but I get a little annoyed when people call it passive income because it implies that you make money when you sleep.
Yeah.
And I'm like, no, there's work, right? You got to hire, or either you have to hire good people and probably both do lots of hard work in order to make it work.